guys. Everybody perk your ears up. We have Mark Ryden from Aethir will be moderating this. We got some great guests here, including Mike Ho from American Bitcoin, Eric Trump's thing, they're one of the hottest things on the market right now. We got SJO, head of digital assets from Hyper Corporation, and Yeonwoo from BD lead at CLS Global. So DATs are all the rage right now, and we got some of the biggest ones in the world here. So let's give them your attention, guys. Here you go, Mark.
All right. Thank you. Thank you. Cool. Well, I feel privileged to be up here chatting with you gentlemen. It is the acronym of the moment, I think, DATs, right? For those in the audience that maybe don't fully know what they are, I think you guys are probably the best people to be asking. So if you could, maybe in your own words, give us a little bit of a rundown on what is a digital asset treasury company?
We're a little different than just a digital asset treasury company. At American Bitcoin, we like to think of ourselves as not just a treasury, but we are an accumulator, and we do that through multiple strategies. At the core of our business, we have a DNA that's built in Bitcoin mining. We see Bitcoin mining really as a means of being able to accumulate Bitcoin at a discount to spot. As of lately, our cost to mine a Bitcoin is about half of where spot trades at. All-in cost is less than $60,000. Cost of energy is less than $40,000. That is just one layer of our strategy in how we accumulate Bitcoin. In addition to mining, we have all the means of being a U.S. capital market, U.S. publicly listed company, and being able to monetize volatility, monetize liquidity, and looking at ways to creatively add Bitcoin to the balance sheet, offering pure beta exposure to our shareholders.
So if I was looking to acquire Bitcoin, if I believed in it, it's financially better off for me to go through a DAT like yours.
Well, when you invest in a DAT, the difference between a DAT and when you buy a spot Bitcoin or an ETF is when you buy an ETF spot, your ratio of ownership will always only ever be one, less the ETF fees, so one or less. When you buy a DAT company, you're betting on the management company and the active management. DATs at times will trade at a premium, at times they'll trade at a discount, but you're really betting on the management of the company to increase your underlying token per share.
Great explanation. I want an even simpler explanation from you guys. How do we really dumb it down for all the rest of us out here?
So I actually think it's similar to what Mike said. It's an actively managed strategy, but more importantly for countries like Korea, where you don't really have the institutions having access to pretty much a direct way to acquire crypto. Unfortunately, a lot of the accounting firms still will not take you on as a client if you have crypto on your assets. There are talks of opening up ETFs, and there are talks of opening up the accounts for local institutions. But until that happens, there really is no proxy for any institution to have exposure for Bitcoin. In the U.S., a little different. I understand there's 160 different DATs. You have a bunch of listed miners. And of course, you have the OG strategy as well. In Korea, I think it's carte blanche, and whoever can get involved and have a first mover advantage, they will do very well. More importantly, for foreign investors, I think there's a lot of eyeballs on Korea because it's the second biggest crypto market in terms of fiat market share. But there is no real, the arbitrage is very similar to what you saw in Metaplan in Japan. If you are an investor buying crypto directly, you will be subject to about 50% cap gains taxes. Whereas if you buy a vehicle online, it's 20%. So it's a 30% ARB from the get-go. Korea, it's the same story. For foreigners, provided that you are not the majority shareholder, you will only be subject to 35 bps stamp duty, and not the 20%, which will be effective 2027.
So the DAT space in Korea is emerging. It's up and coming now. This is kind of a space that is ripe for opportunity. Should legislation open the door? Is that kind of what you're suggesting?
Well, that's what we all hope. But I think it's a little bit of a unique market, I would say, because there is still the skeletons from the Asian financial crisis where the country almost went bankrupt. So I don't think there will ever be a scenario where the Korean government will prioritize the investment of the crypto ecosystem over the Korean won. So I think cross-border capital controls are here to stay. There will remain this blockage of free flowing capital, which will typically always provide you an arbitrage opportunity. And if somebody can get it right, there's a lot of money to be made.
Yeah, I mean, with all the trading volume that we're seeing on crypto exchanges in Korea, I can't imagine that they wouldn't be very, very interested in access to digital assets through capital markets as well. Love to hear your take and maybe what you feel that the digital asset treasury space is.
Yeah, I feel like I agree with definitely both what they said, but I guess more on the regulatory framework standpoint in Korea. I think everyone knows that it's a bit of a tricky gray area. However, I think if there are different strategies and different companies that are able to make the first move and become the biggest company to be able to provide those consults and correct strategies to penetrate the market, then these are the ones that we should be following as well. And as we said, like, it's kind of just, we should hope that the regulatory framework and the governance does push the crypto ecosystem as much as they can. But for now, it's really looking at what we can do with the given framework and who is the first mover.
Absolutely. Mike, you made a really great point earlier on that with DATs, you're very often making a bet on the management team, right? I guess through them, you're also making a bet on the strategy, right? And the yield that these treasury companies are generating. How do they generate yield? What's the structure in play there? Maybe you can give us a bit of an insight into how you guys do it.
I'm sure it's nuanced with many operators and different DATs, but at the core, speaking from a U.S. listing, being a U.S. listed company, main board listed company, you have two really vanilla strategies that DATs can run. One is being able to be shelf eligible. You have what's called an ATM and at the market offering. ATM, basically, as it sounds, is the ability to issue new shares into the market. You're selling down new company shares into the market where the proceeds come to the company treasury, which means that when you're trading at a high MNAV, when you're trading at a multiple to NAV, you're trading $1 of dilution of your company for 3, 4, 5, potentially even higher back in Bitcoin. Now, that is a very attractive trade. It is very accretive to all the existing shareholders. It's accretive for new shareholders. But the second layer to that is liquidity and trading volume. There's no easy button that you can hit where you can trade $1 billion of dilution for $6 billion back in Bitcoin. And it's really in liquidity building. It's in identifying different demographics and how you design instruments and products that I think will be the biggest challenge for a lot of DATs. Vanilla approach is you have ability to tap into programs like the ATM, ability to issue converts, low cost converts that convert at a premium to the current share price, and that's monetizing the volatility. I think where you're going to start seeing is the nuance and creativity is going to be how you identify different demographics, different markets, and how you create exposure for those investors for the underlying token, and while driving value to your shareholders.
100%. SJ, with that in mind, rank these for me in importance. Is it the asset, Bitcoin, for example, or whatever the DAT is? Is it the management team, or is it how they structure yield? How would you kind of put those in order?
Well, I mean, if you don't believe the upside in Bitcoin, DATs are probably not a good investment for you. So I think that's just an underlying assumption. But in terms of I think that DATs 1.0, it was about who has the biggest coffers. And there's a very clear standout number one, which is strategy. But as Mike alluded to, like there's not too much value you can return to shareholders by simply buying and holds. And the yields, if you stake Bitcoin, are less than 1%. So you're going to have to get creative. Mike alluded to their advantages for mining, which obviously they have access to deep capital and have access to the biggest miners in the world that are based in the U.S. I actually co-founded a mine called Power. Acronym is Proof of Work Renewable Energy. So we're trying to proliferate the renewable energy generation, but we also have a hash rate trading platform. And if we can, the way I see it is if you purchase hash rate It's almost like buying Bitcoin at a discount in installments. So we're not in a rush to purchase it. For us, it's just to accumulate as many as we can as cheaply as possible, which is the first part. But the second part, there's also many ways to skin this cat. You don't just have to stake Bitcoin. There are many Bitcoin denominated NAV funds as well that are running risk-free arbitrage strategies that are punching in 15, 20, 25%. You can also engage with the prime brokers that are used to giving you cash loans collateralized with Bitcoin. But what if you do a repo with those guys? There's so many different ways to do it, but maybe I could leave some more answers to Yeonwoo.
Yeah, I mean that sophistication of management of the digital asset in and around that capital market space is one of the key, I guess, expertise elements that you guys are really unlocking. I think that's kind of a very, very interesting skill set that I think is developing very, very quickly. But love to hear your take on this as well.
Yeah, I guess as a market maker in the crypto space, it's really about being able to advise projects similarly to how DATs are strategizing different yield making strategies, to be able to navigate through the given framework and the movement of liquidity within the market. So as Mike mentioned, like accumulating and bringing value to the shareholders is something that we always are looking to capture, and also kind of be able to project the liquidity within the markets and where it's going to be moving next.
Okay, I think are all somewhat familiar with traditional treasury management companies and solutions in capital markets, whether it's treasuries or bonds or derivatives. How is that space different from this new digital asset treasury space that we're kind of starting to see more movement into now?
Well, this is very novel. It's very nascent. It's quite bespoke. Very rarely have we seen asset classes with the type of volatility that crypto carries. Prior to crypto, high volatility was tech stocks with the 30 ball. Bitcoin underlying vol, although it's coming down around 50, and the underlying stocks that track Bitcoin trade at an even higher vol. So a lot of value is to be captured if you know where to look. And it's really, as part of the active management, I think the best operators of DATs will be, how do you find value and monetize the intangibles? That's why I kind of alluded to monetizing liquidity. Well, what does that mean? It's knowing how to add, to be very accretive in dilution, and you're adding value to your shareholders, increasing your value per share, your Bitcoin per share, monetizing volatility, it's recognizing volatility. But the nuances in how do you design the instruments, how everyone recognizes the standard vanilla converts. Converts you can get really creative with, especially with the collateral packages and where you price the rate of return. It's understanding your investor who's on the other side so intimately well, understanding where their push-pull factors are, where their hurdle rates are, and being very creative on how you can design around it. Even on the equity side, something that was very neat was Tommy Lee at BitMine just did a above market equity financing, but with 2 tranches of warrants at even higher premiums. Now, when you run the Black Scholes on BMNR, BitMine, it's probably, I think it's probably around 100 on the ball. And then when you look at that duration of the 3-year warrants, which they issue 2 3-year warrants at 40% above market, the value of those 2 warrants is actually close to 70%. Now, they did their equity at 14%, roughly 14% above last close, but the 2 warrants, if to the right investor, is worth 70 points. Now, that is very attractive, and that's very accretive to the existing shareholders, where it's an above market financing and it's dilution at a much higher upstrike. So it's bespoke. It's bespoke instrument financial designing, where you're still bringing capital in while maintaining accretion value to your existing shareholders and tapping as much liquidity as possible.
Really interesting. I mean, who are the shareholders in this emerging ecosystem, right? Is it very crypto native funds that are participating? Is it getting retail attention? What does liquidity look like? How do you feel about the participation side on the capital markets?
So Korea is kind of unique because, as I mentioned earlier, it's the second biggest crypto market, but it's entirely composed of retail participation. The retail ownership in Korea is over 30%. If you look at the institution ownership, it's less than one. So to answer your question, I don't think it'll be the native crypto cohorts because they have all sorts of ways to accumulate coin. It's more so the TradFi cohort that simply do not have a way to access crypto at this point. The only legal way you can purchase crypto as an institution right now is if you're running an exchange like Upit and you receive payment in kind, you acquire a company that happens to have crypto on their balance sheets. And I mean, you can get creative, but that's really the only two ways you can do it. And if you try to send money abroad with the objective of purchasing crypto, the BOK will block you. So we are waiting for these doors to open. They were supposed to open in June for the list closed first. But that got pushed back because we had an impeachment and martial law to deal with. But if that schedule is intact, which was the nonprofits have their accounts open to sell first in January, and the local instos sequentially from June, the nonprofits just had their accounts open in June. So we're expecting those doors to open around December, January.
Anything you'd like to add to that?
Yeah, I think in Korea, especially as SJ mentioned, it's mainly capturing the retail users, and that usually comes with adoption. And usually within Korea, they as Korea as a country doesn't really they're never the first mover. They kind of wait for maybe America to test something out, and then wait for the European markets to move, and then they're like, okay, we have to get on this as well. And I think within Korea as well, you have the large Upbit, Bipdon, all those movers. And now that we saw Upbit with launching their L2, and for driving even more crypto adoption and eyes to the markets, I think this will be a very big game changer in crypto Korean years.
Fantastic. So where is the biggest opportunity at the moment for institutionals or potential shareholders sitting on the sidelines? What should they be looking for?
It's hard to go wrong when we're speaking about Bitcoin, speaking our book, but when you look at Bitcoin in particular, it's really hard to go wrong for any type of investor getting any access, and just getting exposure to Bitcoin is the right starting point. And what's interesting about Bitcoin, and the reason why we believe Bitcoin is very different than all the other cryptos. Bitcoin is the reserve asset. We're very pro every other crypto. The better that every project does, the more abundance and on-ramps, it's greater for the whole ecosystem. But Bitcoin is the one true scarcity asset. It will only ever be, as we all know here in this room, 21 million Bitcoin. But when you look at the dynamics of the floats and the price action, it's so interesting. 70% of wallets haven't moved in over a year. And and there's actually a double-digit percentage of wallets that haven't moved in 5 to 10 years. So those are ancient wallets. So when you look at the actual floats of Bitcoin, it's just under 6 million Bitcoins. When you look at the inflation of Bitcoin, inflation is really the mining rewards. That's 450 Bitcoins a day. I mean, that's tens of millions of dollars relative to just IBIT ETF inflows alone, average currently at about $200 to $250 million. And this is before we're seeing widespread institutional adoption. We're here in Seoul, Korea. Regulation is still on the come for Korean institutions and financial firms to be able to purchase Bitcoin directly to their balance sheet. When you look at where the market is converging with the inflation of fiat, the increase of M2, and the decrease in supply because of treasury companies, because of ETFs, where the Bitcoin supply is only compressing, I think the case to be made about Bitcoin is the price action is extremely favorable.
I'll just add that I think price action on Bitcoin looks like a short squeeze in very slow motion. There are about 360 DATs that the last time I checked, albeit not all of them are Bitcoin, pure Bitcoin plays. But all these guys are looking to buy the dip because if you look at every single announcement by the DATs, one of the main points of focus is what was the average cost that cost you to purchase these Bitcoin. So these dips that have like 60, 80% drawdowns, hopefully will be a thing of the past. The upside, I think, will come from the pensions and the sovereign wealth funds. And these guys are, in some cases, managing hundreds of trillions of dollars. And I don't think these guys will risk having reputational risk by investing in something that there is no federal definition of. It's almost like the cannabis industry where you have certain states are completely kosher, but still nobody knows what the definition of Bitcoin or crypto is for that matter. And once the federal definition is set in place, I think that's when these big conservative money managers will come into play. And that's when you will see the short squeeze really move in action.
I guess to add to that, the importance here is also the adoption between Web2 institutions, large institutions using crypto as well. And it's less about making the quick money. I feel like the cycle is changing now where crypto is really being used everywhere in every kind of payment, any kind of the blockchain system being used in all technologies as well. So it's less about making quick money and more about strategizing to generate yield and not keeping some of your assets idle and having a safer yield generating system.
Awesome. Well, gentlemen, we've got a fantastic audience here of investors and retail holders, and I'm sure many Bitcoiners as well. Any takeaways you'd like to share with the audience before we wrap up?
I think it's from a macro perspective. I think we're going into a massive bull run. It's just a matter of which quarter. I think it's mostly going to be driven by the Fed and the tone of Powell, unfortunately for now. But if not Q4, probably looking at a very bullish Q1, Q2.
Love to hear it.
I'll just make a plug into my company. I just joined Hyper Corporation in September. I had just moved back from Singapore to Hong Kong, which was my home, in June. And it was such a compelling opportunity that I chose to pick up and move once again. My wife's not too happy about that, but we'll deal with that later. We are a DAT Kazakh listed. We are, and also the important thing is, as a majority shareholder, or even some of the other DATs in Korea, they are entirely driven by overseas capital. Unfortunately, that does not look too good in front of the regulators. I think we differentiate in the sense that the existing management will retain their position. They have experience of managing listed companies in Korea for nearly 10 years. And we have great sponsors who will continue to bring in the cash, hopefully. And hopefully I'll be able to do a good job and then make this work.
I'm sure you will. And Yeonwoo?
Yeah, I think, as Mike mentioned, everyone has been talking about, Q2 is going to be the bull run. Q3 is going to be the bull run. Q4 is going to be the bull run. And I think nowadays it's less about predicting when it's going to happen and being prepared for the upside and accumulating for when the bull run is to come. And yeah, let's look forward to that.
All right. Well, thank you very much for joining us and getting involved and talking about the DATs. And yeah, I'm sure if you have any questions, feel free to come and ask these other gentlemen. Thank you. Thank you.